Morning, and welcome to everyone participating in today's webinar, Understanding and Implementing Business Systems. So my name is Yevgeny Sahenko. I'm a manager at GRF CPAs Advisors, and I'm going to be today's session moderator. So before we dive in, just some quick housekeeping items so that everybody understands what you need to do to earn CPE credit. So for anyone seeking CPE credit today, remember that you must complete and submit a short evaluation survey that's going to follow our webinar and appear automatically. You're going to be asked to recall words that are given throughout the webinar to receive the CPE credit. Please jot these words down as they're given because they are not going to be provided again. You will need these words for the survey and to receive your certificate. If you have any technical questions or any issues arise during our discussion, please use our chat function to speak with our administrator for assistance. The slide deck and the recording from today's discussion, it's going to be made available on the events page of our GRF CPAs website. Any technical support or CPE questions, those may be addressed to Nathan at nmcelven@grfcpa.com. So today's learning objective is to provide an overview of the implementation and management of business systems. And with that, I'm going to introduce today's speakers. So Paul Calabrese is a principal in the outsourced accounting and advisory services department at GRF. He brings a successful track record of working with government contractors. His remarkable career includes positions with the Air Force Audit Agency, Defense Contract Audit Agency, DCAA, and 3 government contractors, in addition to his 20+ years in public accounting. Mr. Calabrese's extensive experience with the cost accounting standards, CAS, and CAS disclosure statements, federal acquisition regulation cost principles, the FAR, and the uniform guidance for federal grants positions him as a sought-after resource and consultant for all facets of federal government contracting and grant cost accounting. Likewise, Steve Shamlin is the founder of Government Contract Compliance Management, LLC, a firm dedicated to providing high-quality government contract accounting and pricing services to mid-market and emerging government contractors. Steve has over 20 years of experience serving government contractors of all sizes in a wide variety of industries. His experience has come from his work in the DCAA, industry, and consulting. And with that, I'm going to turn the presentation over to our speakers.
Thank you. Thank you, Yev. Next slide. So I would like to just introduce what we're going to be talking about today, and that's understanding and implementing business systems with Steve. And we will get into just what are those business systems, how are they kind of structured and set up, and we'll definitely get into talking about the most common business systems, of 3 of them. And that's pretty much going to be the first section, and a large section and a lot of detail that Steve will provide. And in the latter section, I will be talking about the best practices to prepare for review, and also includes some early development implementation. Before we go on to the next slide, I just want to share with you that there's an impetus for this whole discussion. And that is that last year we noticed there were a lot of RFPs that came out with additional evaluation points for things like having an estimating system review or a contractor purchasing system review. And so a lot of people were coming and talking to us about it, and there were a lot of small businesses. And so some of the discussion at the end will be discussing, as it's related to an article that I wrote that's on our website about implementing business systems and small businesses. And so now I'd like to turn it over to Steve.
Thanks for having me. I'll be talking from the standpoint of mostly what is required for contractors that are subject to these rules. We'll touch a little bit on applying these rules to contractors that are not subject to them, or doing early implementation if you're not subject to the rules. But for the most part, we're taking it straight down the middle. This is the way the rules were intended to be applied. Okay. So There are 6 business systems that are regulated. We're going to be talking about the first 3, but all of the business systems are based upon internal controls. Why internal controls? Why would the government care about how you operate your business and manage your organizations? Well, when the government understands that internal controls are the first line of defense against fraud, waste, and abuse. That seems like a bit of a stretch. When businesses implement internal controls, it's generally thought of as a reasonable assurance against errors and misstatements, or a way to reasonably assure that management's objectives will be accomplished. The government's looking for this as a way to stop fraud, waste, and abuse. And that's why they seem to be so concerned about it. Next slide, please. Here's the 6 business systems. We'll be talking about the first 3: accounting systems, cost estimating systems, and purchasing and subcontract administration. But before we go on, just touch very briefly on the last 3. Government property system. Government has a good handle on this. They manage it pretty effectively. There are frequent audits and spot audits. The purpose for having a government property system from the government standpoint is that they want their equipment returned in good condition and only to be used for things that benefit them, their stated authorized purpose. On the contractor side, it's good to have an approved system, because if it is approved, then the government insures the property. So the next one is material management and accounting systems. This regulation came out about, well, shortly after just-in-time inventory accounting was adopted. And the government seems to have thought that the only way its contractors are going to apply those principles is if they mandate it by regulation. And so you've got material management and accounting system. It seems redundant, and it seems to regulate something that was already in existence. Earned value management system. Earned value was developed by a contractor, and it's to monitor the process of big, complicated production jobs. I don't think the government fully understands the benefits from this. They, at least at one time, mandated its use for cost type contracting, and that just doesn't make any sense. It's better used for fixed price contracts of big, complicated production jobs. Next, please. The general structure of the business system regulation is like this. The general threshold is cast coverage. It may have other thresholds specified in individual regulations, but cast coverage includes all of the exemptions. So right out of the gate, small businesses are exempt. The requirements are stated in the individual regulations. We'll go over the first 3. Periodic renewal is not always stated. It is stated in the purchasing system, but it's generally thought of as between 3 and 5 years. So if you have an approved business system and it's getting to be 3 to 5 years old, you need to start thinking about getting it renewed. And there are penalties for non-compliance, and non-compliance are defined as any material deficiency in complying with any of the standards. If you have a material deficiency, you're subject to a billing withhold of between 5 and 10%. So if you have multiple deficiencies, the billing withhold is capped at 10%. So if you're talking to a consultant at one of the big four firms, or a big attorney, or even maybe your big prime contractor, and you talk about business systems and wanting to be subject to them, well, their response is why? If you're in violation of any of the requirements, you get a billing withhold. Why would you want to subject yourself to that? And that's the attitude of the big government contractors and those that service them. We'll talk a little bit more about why maybe smaller companies would want to be subject to this. And next slide, please.
Thanks, Steve. So we reached our first polling question, and our question is your organization considering the development of one of the 6 business systems? A, for not at all. B, for we will outsource a consultant to help us prepare the business system. Answer C, for we are certain our business system is in operation and will hire a public accounting firm to do the review. And D, for unsure. So please, everyone, take a moment to submit your answer. While everybody's doing that, I'm going to remind you that to receive CPE credit, you're going to need to jot down the CPE words. The first CPE word is value. Once again, please write the word down, as you'll need it for the survey that's going to follow our webinar. The first CPE word, once again, is value. V-A-L-U-E.
Interesting.
Okay, are we ready to go? We will be examining the first 3 common business systems and doing them in the order that we think that will be most important to you. First purchasing, then accounting, and then estimating. So with the purchasing system, the first thing we do is we throw out the general threshold. The threshold is contracting officer's judgment, 25 million in flexibly priced contracts sales to the government in the preceding year. Let's read the exact language. It says the ACO shall determine the need for a CPSR based on, but not limited to, the past performance of the contractor and the volume, complexity, and dollar value of subcontracts. If a contractor's sales to the government, excluding competitively awarded firm fixed price and competitively awarded fixed price with economic price adjustment contracts, and sales of commercial supplies and commercial services pursuant to Part 12, are expected to exceed 25 million during the next 12 months, perform a review to determine if a CPSR is needed. Sales include those represented by prime contracts, subcontracts under the government prime contracts, and modifications. Generally, a CPSR is not performed for a specific contract. The head of the agency responsible for contract administration may raise or lower the $25 million review level if it's considered to be in the government's best interest. It's a pretty well thought out threshold. The contractor has to have certain amount of volume with the government. It requires the contracting officer to exercise judgment. So if the contractor's doing a lot of business but doesn't subcontract much of the work, there's no need to perform a CPSR.
Hey, Steve.
Sir.
What's interesting is that it seems in this situation, the FAR provides the threshold, but it's the DoD FAR that provides the criteria.
Yes. Yes, and that's what you'll normally see. The criteria is in the DFARs. And the FAR and the DFAR is going to work together. These are good internal controls, and the agencies are using them to varying degrees. So the DoD has come up with them. but the other agencies are using them to varying degrees. There are benefits to both the government and the contractor for the contractor having an approved business system. And the benefits are there's certain consent requirements and certain notification requirements that are waived when the contractor has an approved system. This saves the contractor from the hassle of getting government approval for every purchase that it makes to the contract. It saves the government from doing all the work of qualifying the qualifying subcontractors. Next, please. Here are the requirements. There's 2 slides of them, I think 24 in all. We're not going to go over all of them, but let me pick out a few here and there to kind of get a flavor of this. First of all, there's a system description requirement. And this is not something that you draw up overnight. This is a system, it's a well thought of description of the purchasing process. It includes policies and procedures, et cetera. And so the policies and procedures should be well thought out and actually used. Purchasing system should include flow down clauses to purchase orders and subcontracts. And that's a very important thing for, in the government's mind, it's how government regulations get applied at the subcontract level. You should have purchase orders that are well supported, including purchase requisitions, justification for the selection, price, justification for the price, history of your dealings with that particular vendor. Purchase history. This means the history of your purchases with that vendor. Interesting data comes out of that. It's a basis for doing some price analysis. This is what we paid for it in the past. This is what they want us to pay for it now. Is it reasonable? Also gives a history of your negotiations of the price. So past history shows that we negotiated a 10% discount over the original price. So when we submit our proposal to the government, our price for this subcontractor should include the expectation that we're going to get a 10% discount, just like we've done in the past.
Hey, Steve.
Yeah.
And number 3, what does LOA stand for?
Lines of authority.
Okay, thank you.
Make or buy policy. As you see, this is particularly applies to manufacturing. So if you have if it costs you 3 times the amount to make something in-house as it does to buy it, you'd better have a pretty darn good quality system because it doesn't, paying 3 times doesn't appear to be in the government interest. Of course, you should be able to have competitive sourcing to the extent practicable. And of course, you should not deal with suspended or debarred contractors. Of course, you should have fair and reasonable pricing. And that's not just based on price alone, price, quantity, delivery, technical capabilities, and financial capabilities. You shouldn't be dealing with a contractor or supplier that you think is going to go bankrupt during the course of performance.
So there's some pre-award assessment, basically.
Exactly.
And just one statement, just if you're mostly a service firm, then this purchasing system review actually develops with a lot of subcontract and subcontract administration.
Mm-hmm. Something important here on item 11. That's performing post-negotiation memorandums. And the P&M should document your negotiations with your subcontractor. It's doing exactly what the government would do when documenting its negotiations with you. And that is the basis for any subsequent defective pricing audit. It should show the cost or pricing data that was submitted in support of the vendor's price. It should show anything relating to the understood scope of the work. And you should know that the government is going to have do a P&M on your negotiations. And they will use it in post-negotiation, in defective pricing audits. You should do your own P&M of that negotiation, and you should do P&Ms of your negotiations with your subcontractors. Let's go to the next slide, please. Yeah, and in that post-negotiation memorandum, you should justify any reasons for changes that affect cost or price. Also, you should document that over the course of this subcontract. If the scope changes and that leads to a change in price, that should be documented. Not only do you have to notify the government of audit rights, you have to ensure that the government exercises those rights. So you're managing government performance there. 17, you enforce policies against conflict of interest, gifts, gratuities, and kickbacks. This is fundamental to the culture that you are expected to maintain. Not only should your people not be soliciting, gifts and gratuities, your vendors should not be soliciting, should not be offering them. And if there's, if one of your people solicits a gift or gratuity, your vendor should have a means of reporting that to you. And they should have, in their culture, an abhorrence of giving gifts, and they should, they should use the hotline, and they should expect that you would take action against that employee, and that they will probably never see him again.
So it's a part of a real robust code of conduct, which again, it's kind of an overlap, but it's reminding, right, that all of them have, because I think there's a FAR reg on code of conduct for this as well, but they're really, integrating it and showing the importance.
Yeah. Yeah, very early in the FAR is the ethics requirements. Yes. So it shows you how important the government thinks those are. Government's really big on internal audits. And training and management review. I took some liberties at 20 and 21 because those are long requirements. And I just basically, the purchasing system works. And that means that you get the appropriate parts from the appropriate vendors at the appropriate time with the appropriate quality. So you obey all the rules, but you can't get the stuff in on time. That's not a functional purchasing system. The selection process works. It means you deal with debarred or suspended vendors, and you justify the vendor that you selected. Of course, cost or price analysis performed as necessary, proper subcontract types, etc. So there's the requirements. Let's go to the next one. They have some limitations and constraints, and they're just not implementable by everyone. It implies a segregation of duties. A competent and well-trained staff. So the person that you hire to be in charge of your purchasing system is going to have some years of experience. It's going to be kind of expensive, and will have requirements to run an organization that is effective and competent. Not only do you have to have somebody heading the organization who is effective and competent, but that person's boss has to understand what that person does and be able to review that person's work. So a good government contract manager is a good, competent individual, and knows what his subordinates are supposed to be doing and how they're supposed to be doing it.
So some of these people could have like the NCMA training, National Contract Management Association training certification. They could have come from the federal government. Now they're working in private, or from a large firm. But these people have extensive specialized skill set.
Yes, and they don't come cheap.
Right.
And you need to know what to do with them and how to manage them. Okay. Need to know how to do cost or price analysis, and that's in some cases that requires a team. So you're going to send people out to gather cost data. You're going to have sources of information so that they can evaluate prices. Your subcontract administrators are going to have monitor how the vendors are doing, how well they're performing against schedule and cost. You're gonna have to do vendor audits. So, and you're gonna have to have systems to maintain policies and procedures, vendor purchase history, etc.
So the government provides the parameters, but unfortunately they don't provide all the details. So that's again why you need these people who are specialized, right, to carry these detail out of contract monitoring or vendor monitoring.
Yep. The people that you hire to do this should truly understand it. It's not something that you take a couple of courses and then you're qualified. This requires some experience and judgment. Let's go on to the next one. The accounting system. Accounting system threshold is cash coverage and cost type contracts. Benefits, it's the first line of defense against non-compliance with FAR Part 31 and cost accounting standards. And even if the accounting system regulation doesn't apply to you directly, it is used by various agencies as their criteria for approving their own accounting systems.
Like USAID. Right.
Yeah. And USAID is not the only one.
Okay, cool.
Yep. All right, let's go next. Next slide, please. Okay. Again, a couple pages of requirements, and you look at these. A lot of these are, motherhood and apple pie. You'll have a good internal control environment. Means that you hire good, capable people who know what they're doing. You segregate direct from indirect costs. You have a cost accounting system that includes identification of indirect cost. And logically and consistently allocates those costs to contracts. It's under GL control. We'll get back to that as we go along. Approval and documentation of adjusting journal entries. I had a client who needed to do labor adjustments. And so the accounting manager asked the DCAA auditor how to do labor adjustments. The auditor said that she should establish a fictitious employee and run all the changes through that employee. And so there was an employee named Ms. Billing Transfers, employee number 99999, had a lot of transactions, but the balance was 0. And those are adjusting journal entries. They're not approved or supported. And how come the accounting manager's boss didn't catch that? So, the adjusting journal entries should be approved and documented, well supported. All these policies and procedures should be monitored either by internal audit or management review to make sure that they're consistently applied over the long period of time. Of course, it's going to say something about timekeeping. There are also, these rules were created a long time ago, and accounting systems were established where there was a general ledger supported by subsidiary ledgers, and the subsidiary ledgers had to post to the general ledger at the end of every month as part of the closing process. One of the ways to post labor was, well, the way to post labor was through a labor distribution system. You should be able to reconcile your labor as recorded in the GL across all your subsidiary ledgers, all your projects. Not every accounting system software does that. So this is an important step. And some kind of exclusion of unallowable cost, that doesn't mean that you have to know all the unallowable cost and make sure that you book them to unallowable accounts. But at some point, at least within the year, you're going to scrub those accounts and make sure that unallowable costs are not billed to the government. So at a minimum, you should be excluding direct unallowable cost from your monthly billings. Go to the next, please. Okay, more having a cost accounting system, including accumulating costs by CLIN or as otherwise required in the contract, segregation of pre-production costs from production cost. Your accounting system should enable you to comply with limitation of cost, limitation of funds clauses, and your billings of cost to the government should be reconcilable to your cost accounting system. All of this, you might think applies to just cost type contracting, but also it's applicable to fixed price contracting, because what you incurred on your last contract should be a basis or have a significant influence on what you bid on the next one. Okay.
So Steve, you would say that as you look at the criteria here, this looks awfully familiar with the SF 1408 pre-award,
Yes.
survey, right?
Yes, this is an expansion of the SF 1408. And if you're receiving an accounting system audit, it's going to be in much greater detail than a 1408 audit. And you will be expected to have a significant volume of transactions that can be tested. All right, let's go to the next one, please. Again, limitation and constraint, it's applicable to a larger organization, but something that's going to have segregation of duties, be able to hire good, competent staff and keep them trained, have management that understands what subordinates are doing, probably have internal audits. Let's go to the next one, please.
Steve, even though this does, of course, apply, all these systems apply to large entities, but this one is like the minimum for most all GovCon systems, wouldn't you say? I mean, some of the big stuff might be excluded, like management reviews or internal reviews or audits, But this is the basis of an adequate job cost system, right?
It is. And even if this doesn't apply to you, you don't meet the threshold, you should be working to achieve these things.
Yes.
Maybe you've got a good argument that there's only 5 of us here in this organization. We can't have segregation of duties. Okay, as you get bigger, you need to be concentrating on segregating the incompatible duties to the best of your abilities.
Sometimes they use outsourced firms to get around some of those duties, like bank and so forth.
Yeah, you segregate incompatible duties to the extent that you can. Okay, and that brings us to the estimating system. Threshold here, CAS coverage, of course. Also, awards in the prior year of contracts requiring certified cost or pricing data of $50 million or more, consistent with accounting practices and company policy. If you're doing a lot of proposals, even if you're a small company, you're looking at getting a consistent result. You want, as management, you want to be able to review something, review the proposal, and have it look like something that you've seen before, right? You want to be able to apply the same techniques of review that you've used in the past. And if there's a problem with the way that you're reviewing it, you want to be able to adjust that. Even if you're doing something wrong and you're doing it consistently, you can fix that. But if you're doing something wrong randomly, you can't do anything with that. Your estimating policies and procedures should result in a consistent result. Next, please. Again, a whole bunch of requirements. Again, policies and procedures, written descriptions, a requirement that the contractor comply with disclosed practices and notify the contracting officer if those practices change. Talks about what documents will be used and what source data and techniques will be used. Who's responsible for the estimates and how the estimates are going to be reviewed. Requires adequate supervision. And there's an interesting one that's not really, seems to require some more definition for there, but certainly implies an organization that has, a certain number of people. They want you to detect and correct your errors in a timely manner and protect against duplications and omissions. There is a case that's a really worthwhile case to read, the Daewoo construction case, where the contractor made an estimate to get an equitable adjustment. And they not only duplicated their estimates, they tripled and quadrupled their estimates. And this came out in court, and the judge was unsympathetic. So next slide, please. Okay, use of historical data where appropriate, use appropriate analytical methods, management review, and monitoring budgeting processes. So if you have a budget for your indirect cost established at the beginning of the year, how is it going throughout the course of the year? Are you achieving substantial savings, meaning that the estimate of your indirect rate should be reduced? Or are you wildly overrunning your estimates, which indicates that the rate should be adjusted? Next, please. Same limitations as on the other two. It requires an organization of a certain size. And that brings us to our conclusion. These business systems do require an organization of a certain size to implement all the criteria. If you only have 5 people in your organization, you can't do it. You certainly can't do it all. And but at some point you're going to want to start doing these things because they are good internal controls. They ensure consistent results, and they provide reasonable assurance of compliance with regulatory requirements. Next, please.
Thanks, Steve. That's a lot of really great information. So
Thank you.
now on our second polling question, and I'll go ahead and read the question. Outside of an accounting system, which of the following are you planning to have a review for? A, for your estimating system, B, for your purchasing system, C, for your material management accounting system, D, for your earned value management system, and E, for none of the above. So as I mentioned last time, while everybody's recording the answer, I'm going to provide the second CPE word. Our second CPE word is review. Once again, just a reminder, you're going to need the CPE words I'm given throughout the webinar for the survey that's going to follow and to ultimately get your CPE certificate. Once again, the second CPE word is review, REVIEW.
Great. All right, well, that's good information. Thank you all for participating in that poll. Let's go on to the next slide. So now we're coming to the other part of the presentation, which is what Steve has presented as an excellent and very quick, detailed explanation of some of the 3 major systems. And so let's go to the next slide as we begin to prepare. So what Steve and I did before we put this presentation together, and thanks to Steve, is just kind of like different scenarios depending upon the size and organization of the entity, you know, what you would expect with these big, large business systems and its different scenarios. If you're a very, very large entity and DCA has what they call a program plan, each year they set out for the year what they're going to audit, and they have a presence and or DLA or the ACO, Administrative Contracting Officer, and they're on your site most likely, and if it's in their plan, they're going to perform these kinds of business systems review if the time has come up for them to be performed. And of course, they'll do it at no cost. It is quite a bit of an effort for an entity to gear up for it. And generally, they're not happy that they have to have the review. But the good point is they don't have to pay for it. I mean, it's something the government will do. But in the second scenario, you've got some people that also have a mandatory requirement for these business systems review, but they're not really in DCA's view for some reason. This happens a lot of times. DCA just doesn't have it in their program plan. There's no real government on-site presence. And so it'll be a little bit different. They may, these large entities, they may ask that an SME is a subject matter expert and to help them perform a mock review or do some consulting work. But whoever does consulting, if you help with consulting, you can't audit it. Though a lot of firms can do both audits and consulting, they can't do both because of the rules of independence. And they may request an IPA, and an IPA is an independent public accounting firm, to review the GovCon situation, and it'll be some expense at their own expense. Or I've seen some entities are kind of really good. They have great relationships with the ACO or DCA and kind of entreat them and say, look, this is to your benefit to do the review so they don't have to wind up paying. And of course, whenever the government signs off on anything or certifies, perception-wise, it has even greater value than a public accounting firm would have. The third situation is that it's not necessary, but you're a very, very large firm. And so you have the controls, as Steve went through, you have skilled people in place, and they're basically doing a lot of the functions, but maybe not up to the standard of all the criteria in like an estimating or purchasing situation. And so now again, they may have a subject matter expert come in and kind of go through their policies and procedures. And of course, that will they may also have someone do a review. Why would they have someone do a review? Is again, they're looking, as we've talked about in the very beginning, how this whole thing came about is that last year there were some very, very large procurements, and they offered RFP solicitation evaluation in solicitation evaluation points. Hey, 250, 500 additional points. You got an estimating review. You got a contracting purchasing system review. So to the large firm, it is something that's advantageous or beneficial, but they would never do this during the window of 45 or 60 days of an RFP, especially thinking in an estimating that those people are focused on estimating and they can't even think about anything else but getting these important procurements out. So that's kind of the three different perspectives. And then we get to small business, which really is the remainder of the discussion, and we'll go quickly. But they're basically, they don't have the segregation of duties. Steve laid out a great case, 4 or 5 people, 10, 20, still not enough in the purchasing and estimating areas where you're going to need a lot of people. It's not just a person doing contract management. It may be a whole group of people. And so you don't have the resource, the people, the controls, the evaluation points. They're enticing, but maybe no path to accomplishment. So let's go to the next slide. So if you're going to begin to prepare for a review, you're going to either be somewhere with the scenario 2, you may need a little bit of help, a checkup if you're super large and you are required, or you're large and you're going to again go the next step to have these qualified, certified systems, or you're a small business. So you have to understand the business criteria that Steve laid out very well. I think it's very clear. He didn't have time to go over every one of them, but you can see it's quite massive. An honest internal assessment of your capability to achieve this criteria. And what we're talking about also is you should, if you're going to develop policies and procedures, okay, I've developed them under the specific criteria, and like purchasing system has 24. That's quite a bit. And then you need about a year or so of these transactions flowing through under this new criteria. Now, you can't just develop policy and procedures and then you have the old criteria, old transactions. The transactions, we need to see how were the transactions interfacing? Did they follow the controls and so forth? And generally about a year. Okay, next slide. So if you start to engage some subject matter expert or consultant to perform this thing, my approach would be to do a gap analysis. I would come in as a consultant and I would look at what is in place now and what is the ideal environment. And there's going to be a gap. There's going to be a difference. And so there's a process to it. I go through, I do the site survey, I see what's different. I know what the ideal requirements are. As a result, I provide some recommendations to management. I hammer out some kind of approved plan, because whatever we do as a subject matter expert or consultant, it's got to be realistic. It's got to work for them. It's got to be doable. And so management has to approve it. And then later comes implementation and training. Next slide. The next slide is helpful for a couple reasons. One, you'll see in the puzzles, you'll see the default references for some of these business systems if you need to look them up and pull them down. On the far right, this is like I would be coming into a system where I know their accounting system administration is fine. They've got the foundation. But now I would start to discuss with them as I begin to do gap analysis. And I might be finding that their estimating or their purchasing system, they may have robust systems, but they may, the real question I'm trying to figure out as a consultant, would they fail? Because I don't, then there are certain things we need to do to help them. Okay, next slide. So as we wind down our presentation here, a subject matter expert's review as you get ready for somebody doing this review is time consuming, is expensive. It takes a long time. You know, a 45 to 90 day window is probably a lot more realistic. Doing it during the time of an RFP will not work. So it just won't work. There just isn't that kind of time. It needs to be something set aside specifically for this. The third scenario, if you went back to that slide, which you won't do, that third large business system that's ready now, but not mandatorily required, they're making an investment. They're going to the final level of having their system ready. And because maybe they're just saying, hey, these are a great system of internal controls, policies, procedures that the government's come. If they feel it's important, then it must be important for us to understand and to integrate. And the second part is you have to hire someone else. You can't use the same firm to do an independent public accountant to do the kind of review. And it has to be a separate because of independence. Okay.
Thanks, Paul. Okay, so like Paul mentioned, before we start wrapping up, we're going to go ahead and do our final polling question. And the question is, if you're a small business with less than $10 million in revenue, have you won a prime award not as a small business or 8A set aside, STTR or SBIR or sole source? In other words, have you won a prime contract on full and open competition? A for yes, B for no, and C for not applicable. We are not a small business as defined here. So once again, reminder, third and final CPE word, that word is expert. You're going to need the 3 CPE words I've provided so far for the survey that's going to follow our webinar. If you want to get CPE certificate, once again, the final CPE word is expert, EXPERT.
All right. Very good. So most of you probably, unless there's a unique situation where a small business, the chances of the winning a prime, except for the one here, which I would like to congratulate you, shake your hand. I got to know your secret. But most of the small businesses, unfortunately, aren't able to win a prime, except for this one example. And that's good information to know. Thank you for that. Next slide. So again, we talk about elephants in the room. We talk about things, and we're trying to message to some of the smaller firms that developing these systems and having a goal is very, very important. And we commend you for wanting that. But the pros, if you have evaluation points in an RFP, yeah, it's enticing. You want to go after it. But will you have a chance of winning? And that's something you'll have to think about. On the con side, if you haven't had experience with cost plus or cost plus fixed fee contracts, there's a myriad of controls just even before you even get into some of these other systems that you have to follow. And again, we talked about if you don't have written policies and procedures, one of the first things we see with smaller businesses is that they begin to write an accounting manual, and they begin to talk about how we do the accounting and the cost accounting structures. And then have you had transactions under a business system for at least a year? That's going to take time. You can see under the consultant's assistance there, you have the XO 000. So you can see that some of these things are expensive and they do take time. The same with an independent review of such systems, which are 2 separate things. And a very, very large one, like under the scenario 3 in the beginning of my section, they would have the resources. They're going to be a 50 million to 100 million in revenue. And they're not saying this is a drop in the bucket. It is a significant investment for them. But the point is they have the resources. They understand this is something that must happen. Can't be done again in the proposal period. And sometimes small businesses in the very beginning, they don't have the experience working with a professional firm. Okay, let's go to the next slide. We'll try to wrap this up quickly. So when you work with a public accounting firm, if you haven't, you're going to see every time they do it, there's an engagement letter. And what they want is, again, someone on your side that kind of understands the work scope and what are the expectations. That management makes the decisions and you're ultimately responsible for the outcome. You would see this still in a legal document engagement letter too. You would see that they're not responsible for the outcome. They're only here to help you. And as you begin to get experience with public accounting firms, your staff starts to begin to work with them in some fashion or format. It may start with, hey, you come to the guy with a tax return, and the tax return guy at the public accounting firm says, can we have outsource help us a little bit? And outsource helps because maybe the system or whatever you prepared isn't what they need. And then you begin to say, hey, you know, maybe I can use a little bit of outsource help. I don't know, Yev, if you had some experience working with these small firms.
Yeah, what typically happens is these small firms come to us because they've accumulated years of, for lack of a better word, poor and inaccurate accounting information, because perhaps they didn't have the funding to afford an actual experienced trained accountant. They probably hired somebody that had administrative experience that just happened to do bookkeeping. And unfortunately, it's a classic case of you just getting what you pay for. So oftentimes when we have firms reach out to us, it ends up being a lot of cleanup work for us. Number one, to get the books in shape, to clean up all the prior year's activity, but then set up the system, set up the procedures, the controls, so that going forward, the accounting information is going to be accurate. So I think the big takeaway for me whenever these firms reach out to me is kind of consider, perhaps if not, you don't need necessarily for the outsourced accountant to do the work consistently, but at least consider them doing a quarterly review if you find yourself in a position where you just have a bookkeeper or somebody in an admin position that doesn't have the trained accounting experience, because it's going to save you a lot of money going forward as well.
And a nice thing is a compilation, which a firm can, our firm does those, of course, where basically all they're doing is just putting what the bookkeeper did in the financial statement format in accordance with the generally accepted accounting principles at the time. And so at least you kind of, it's a little bit of a check of the bookkeeper to see what the differences are, but also to begin to have something to present to people. True, it's not reviewed and it's not audited, but it is the beginning of making that investment, saying, I want people to know that I'm accountable, that I'm transparent. I'm not ready for an audit review, but I'm going to do at my level, my size, the things that will help promote my firm. So the last slide, I believe. So again, what we're hoping is that we can deal with people that are ready, that have the resources, the capability for a consultant engagement, because we said there's two sides of this business system review. That our goal is to get you audit ready. And if we were asked to do a business system review, we're going to sit and talk with you for a little bit, and that's what you would want, and see that you have a high probability of a successful outcome, that the probability isn't for failure, it's for success. If it's for failure, then we would try to encourage you not to do it, because going down a way, spending this kind of money and knowing that a firm isn't really ready, we wouldn't want to do that for you. We would want for you what is best for you. So now I'm going to turn this back over to Yev.
Perfect. Thanks, Paul. So we got some questions from the audience. I think we probably have enough time for maybe one or two. So I'll go ahead and start with the first one. Looks like maybe a good one for you, Steve. What's the difference between the DFARS accounting system administration and the SF 1408 pre-award contractor survey?
The SF 1408 is, generally speaking, do you have a system that could probably successfully account for cost on government cost type contracts? Can you say the right words? Can you present a policy that says that, yeah, you'll probably do it right? An accounting system audit is going to do a lot more substantive testing, and they're going to find out, are you in fact doing it correctly? If you have to do a 1408 review, the more that you can show that you are doing, you have a cost accounting system that works, the better off you are. But it's primarily for the government to see if you can do it rather than you are doing it.
Got it. Okay. And here's one I think, Paul, this may be a good one in light of everything you were just saying. How do public accounting firms schedule audits and the tax work versus how they do it for outsourced or consulting?
Okay, that's a good question. Basically, for our audits, we've got some kind in the back audit area, a master schedule, and they're doing audits ongoing. And so just if you have to do a specialized review and you need the financial statement audit side, they have to work it into the schedule. It's just not something, unfortunately, where they can drop everything. For tax, I almost see it like a manufacturing process. You know, you have to get it in. They have only so much capacity, and it's not going to, you get your wonderful tax return out the door by 4/15 in a normal year, unless you give it to them in time. And sometimes the tax people are saying, you know, we need it almost by now, by mid-February, so we can see what our capacity is, who has it. You come to them on, you know, a week before 4/15, they're going to say, sure, we'll take it. And all they'll do is extend it. And then when you talk about outsource, you're really talking about planning. I'm sure that Yev is familiar with that. To do an outsource thing, we would come in, understand your needs and requirements, and then we would take it on, and it's a matter of deving up who's going to be responsible, like someone like Yev, who's a manager, and he would have people under him working to do your monthly close or whatever the requirements. Consulting, the last piece, that's stuff that Steve and I do, and we just do it on a project by project basis. And so it just comes and it goes. It's a little bit more erratic. It's not, we wish it was a constant flow, and our goal is to get it to be a constant flow, but sometimes it's a hit or miss kind of thing. So Yev, we'll turn it over to you for final.
Yeah, perfect. Thanks, Paul. Yeah, so well, with that, we'd just like to thank everybody for attending. We obviously encourage you all to follow us on social media at GRF CPAs, and to visit our website, www.grfcpa.com, for all of our upcoming events and our alerts. One last final reminder, please remember to complete the survey that's going to follow this webinar automatically if you wish to earn the CPE credit. Thank you as always, and have a great day.
Thank you.